And I'm going to get back onto the Zoom. And I'm going to start the recording. Right, so in tonight's webinar and Zoom call, we have a special guest, Duncan Knight, who has got a lot of experience in commercial property, asset management, and more recently has been doing his own investments. So we're going to get started straight away. And I'm going to mainly hand over to Duncan and ask a few questions. If anyone else has got questions after the presentation, then that's fine to, come on and ask some additional questions, or anyone on the YouTube can put them on the chat and we'll see what's on there. So welcome, Duncan.
Thanks for having me on.
Yeah. So first question, can you tell us how you got started in the world of commercial property?
Absolutely, yeah. I started 12 years ago, followed in my father's footsteps, who was also qualified chartered surveyor. He started life out of Savills and was there for just over 20 years, and left to join a smaller practice, and became one of two equity partners, and is still going strong at the age of 70.
That's good.
So yeah, very helpful at times. And so I went to university, studied a real estate degree, and then got a job at Savills, straight after university. Did my 2 years of APC training to get qualified. Thankfully got through that experience.
Can you just tell people what ABC training is? Because I think
APC, yeah, it's
not that well known.
yeah, so it's a qualification process. So it's the Associate of Professional Competence, which is it's how the RACS assess you, and sort of credit you and make sure that you are a safe pair of hands, and you're not sort of giving out sort of wayward advice without any justification,
Yes.
And just making sure that they sort of sign you off before they sort of release you into the world, really. So I mean, that's a 2-year process, combined of 2 years of experience, followed by a written submission, a big case study, and sort of displaying examples of what you've been up to in the 2 years, and where you've got experience and where you haven't got experience. And then it's sort of, it concluded with a big an hour interview in front of a panel of 3 other surveyors, and you either sort of you make the cut or you don't, and if you don't, you have to resit sort of 6 months later. So yeah, quite lucky to get through that process. And it's not easy. It's not easy because you do have 3 unknown people sat opposite you, who can go off on different tangents and try and catch you out, and sort of really want to test your knowledge, really, but also test where what you don't know, and want to see that you put your hand up and say, I don't know this, and this is where I'd look to find out, rather than give a made up answer. So yeah,
No, that's good. Yes,
it's good to get through that. Back in
so tell us a bit about the different roles that. So you're saying, tell us a bit about what you're doing in Savills, and then things that you've been, different things that you've been doing after that.
Yeah, so Savills was just over 6 years, and that was in the sort of property and asset management space. So mainly looking after mixed portfolios for a variety of different clients, mostly over the home counties, but in London as well. And that was a mixture of residential, commercial, estate management land, farmland, and development land as well. So a real mixed bag, which was great because you
Yeah.
also meet some
Yeah.
fantastic.
Duncan, how would you explain asset management in, let's say, like 1 minute? Because I think for people that are doing residential property investments, the term asset manager or asset management isn't like sort of so well known. So if you could, yeah, explain that to us a bit, it'd be useful.
Yeah, so asset management is essentially dealing with the running of an asset, but not at a granular level. So it's above sort of property management, as it were, in a role, and you're dealing with how to extract the best value out of a property through paperwork exercises or value add development strategies or repositioning properties or assets to basically elicit the highest value possible.
Okay, that's good. Yeah. Yeah. So if you like, yeah, continue with, I interrupted you, yeah, saying about the different things you've been doing.
So after Savills, I moved into London and basically focused my time working at a real estate finance company based in Canary Wharf, which dealt with insolvencies administrations, particularly on the commercial property side. So we were dealing with distressed assets, um, stepping in on behalf of banks as, receivers, but also asset managers, and working out how best to, dispose of the asset and extract as much value as possible to repay the lender.
Yes. Yes.
Um, so I did that for a couple of years, which was great experience, and then moved to a company called Glenny, who are based in East London, and they focus on the industrial market. So, we were basically working with big investors who were building these huge sheds around London city fringe areas, along the Thames, North London, East London, South London. So yeah, we were dealing with some big investors there, pension funds, those sorts of clients who had oodles of cash, and we were basically advising them on how to deal with their investment
Mm.
portfolios.
Okay, that's interesting. Yes.
And then my sort of last professional role was working for a high net worth as his in-house head of asset management based in Marylebone. So basically a private investor who had, organically accumulated his wealth through property over a 50-year period. Um, Assets were a bit of everything, really. We had some
Mhm.
huge blocks of residential in central London. We had commercial, we had industrial, we had office. And when I say commercial, it spans quite a few different subsectors, but
Mm.
essentially it's office, it's retail, and it's industrial. We did some life sciences. We worked on some development plans. We did a bit of everything, which was great. And again, we were basically monitoring property managers. We had a outsourced team of property managers who were dealing with the day-to-day hands-on running of these properties, and then we would ensure that they were doing what they should be doing.
Yes.
Um, and then we were also looking at bigger picture to work out, what we should be doing with certain assets and whether they were, right time to sell. Should we be buying more? Should we be repositioning certain assets,
Yes.
depending on what the market was doing, really.
So that means you're following closely what's happening in the market.
Very much so, yeah.
Yes.
Speaking
Yeah.
to agents, every day about what they're seeing, what they're hearing,
Yeah.
what the inquiries, etc.
Yeah. I know you mentioned to me sometimes things like the Savills reports on commercial property. Is that the best reference for what's happening in the market, or are there like better or other references to understand sort of what's going on?
Yeah, there's a couple of places. Talking to agents is quite key. So building up a rapport with agents is a great start because that gives you an idea of what's happening live. From a sort of macro perspective, Savills, Knight Frank, JLL, they'll be providing their quarterly or sometimes monthly reports on the market, and they will pinpoint around the UK, certain areas, whether it's sort of prime residential or whether it's prime office space in London, or
Mm.
industrial up in Newcastle, whatever,
Mm.
whatever. You can probably find it on their website on their research tabs. But yeah,
Yes.
so that's a good place to start.
Okay, that's great. Yeah, I've got a list of questions here actually. Makes it easier. What is your most memorable experience from the years that you've been doing all these things in commercial property and asset management?
Good question. One of the things that sort of struck me the most, which was when I was at Savills, I was looking after a mixed portfolio for a very, very wealthy British businessman. And the sort of the usual setup is that you manage their portfolio, you have limited interaction with them because they're busy off being a business owner,
Yeah, yeah.
elsewhere in the world, and you only sort of turn to them for key decisions. But once a year, they would come and inspect the property themselves, the assets, and so we met this British businessman. I won't say his name, but
Mm.
Googled him. I've done a lot of research. I feel, I was at the age of 22. I was quite sort of nervous meeting him, and I met him, and he was just the loveliest guy you'd ever meet.
Yeah.
Extremely wealthy, very clever, very down to earth, very humble. And what I particularly liked about him was that he took care with his tenants.
Mm.
So every year he would go around and he would meet all of his tenants, shake their hand, say hello, pass the time with them, and take a real interest in what they're doing.
Yes,
From
yes.
a tenant's perspective, they loved that because they had a direct sort of contact with their landlord.
That's really good. Yeah.
And that the message I took away from that was that this business is really a sort of a people business. It's
Mm.
very
Yes.
much you get that best out of people by working with them.
Yes.
Yeah, and it was just impressive to see.
Yeah, no, that's really good. That's interesting.
Because you do hear of these sort of property tycoons who are, just rinsing assets and trying to make as much money as possible, and don't have a care in the world for
Mm.
small businesses, really.
Right. Okay, that's good. Yep. Tell us a bit about, I know that you started your own commercial property investments and you're going to be looking at one in a bit more detail. You're going to be presenting that to give us an idea of what's possible in commercial property. But yeah, how did you get started yourself in put you into the onto the other side sort of thing?
Yeah, of course. So I started out in residential. I bought my first sort of buy-to-let probably about 8 years ago. Held that for 4 years in my sort of hometown, Colchester in Essex, and that served me quite well. That was, it made me a bit of money. I didn't make a lot of money sort of month on month, but the
Mm.
capital value sort of appreciated over
Yes.
that sort of 4 year period quite nicely. And so, that was quite a good experience. I then pivoted and wanted to basically, I sold that and wanted to recycle the cash
Mm.
into commercial property. And I started my journey in 2022 when I technically, well, I drove up to look at two properties in the northeast,
Mm.
and one of them I'm about to talk about,
Yes.
and the second one we're hopefully a week or two away from purchasing, but it's been nearly a 3 year process, that one. So
Yes.
it's been a long time coming, but
Gosh, 3 years to purchase the property.
3 year. Well, yeah, we were unsuccessful initially, and this is
Yeah,
quite
yeah.
interesting. We I put it a bit in, unsuccessful. I got outbid by someone else. Didn't think anything of it, and then about 4 months later, the agent rang me up and said,
That's
"The
really, yeah,
chap who outbid you didn't perform, and are you still interested?" And I
yeah.
said yes, but we may have to revisit the purchase price.
That's quite good. Yeah, that sort of kept the property occupied for 2 years whilst
Exactly.
you were getting ready to go and put a better offer in, well, a lower offer in, and get it. That's really good. Yes.
Exactly. So it sort of worked out my favor, and yeah, fingers crossed we'll complete in the next couple of weeks.
That's good. Yeah.
Um,
One last question before we hand over back to you for the presentation. For someone who's starting in commercial property investments, like you said yourself, you initially had a residential buy-to-let. Obviously, you got the commercial property experience yourself, but then started getting to it. For someone starting completely in commercial property investments, what would you say are the biggest challenges, things to look out for?
biggest challenges, I think education is key.
Mm.
My my interest was piqued when I listened to uh, basically I came across a podcast by another property investor, commercial property investor based up in
Mm.
Scotland. Very good. And he distilled everything down, on a granular basis, step by step, podcast by podcast. I think he's on 250 episodes by now. But
Yes.
I started listening to him. Very, very good. He got me into it, and he started started residential, made the jump over, and I think he has helped people learn more. It's accessible. It's a free service. He doesn't want to make any money off the back of it. So I think just broadening people's horizons, and talking more, I think is the key. That's
Mm.
a challenge if you're not surrounded by those sorts of people.
Yes. Okay.
The second thing is more of a barrier to entry is capital. And I think,
Mm.
the perception is you need quite a lot of money to get started, but just with residential, you know, you can start from as little as sort of 20,000 really. So if you know what to buy really. So it's not always the case.
Okay, yeah. And I'm going to add on that one, because yeah, Duncan and myself have been looking at some commercial property investments that we've been proposing to different people who are interested. We're also looking to put together, people know that we're doing the pooled BRR projects. We're also looking at putting together a pooled commercial property investment to be able to get into a larger property. But obviously, this specific one that we're thinking about, it needs around 400,000 as in the deposit. The rest will be bank finance. But yeah, we're looking at either this one or another one, opening it up as a pooled investment where several investors can come in, but
Yeah.
obviously backed up by the experience of, well, Duncan and myself in general. Yeah, I guess my experience specifically on setting up these type of deals. So most likely people already got questions. Keep your questions for the moment and write them down or keep them in mind. So I'm going to hand over to Duncan now for probably around 10-15 minutes. He's going to share his screen and speak about yeah, the investment that he made. And afterwards we can have questions either general or specifically about this project.
Trevor, I'm happy for anyone to jump in as I go through my presentation. If it helps people, they're very
Yeah, yeah,
welcome. Um,
yeah, I'm happy with that as well. Yeah, so
so
let's do like that. Yeah.
yeah, feel
And
free
then
to.
we'll have more general questions sort of about commercial properties. Yeah, so any questions specific to what Duncan's saying, don't hesitate to yeah, to speak up.
Right, I will share my screen.
Yep.
Okay, can you see that okay?
Yeah, I can see it fine.
Great. So, thank you very much, Trevor. This is just a quick presentation on a property purchase we made in May last year. So since May last year, I set up two companies. One is our sort of real estate investment arm, which is LaRock Real Estate, and the other is LaRock Consultancy, which is sort of the operator management sort of side. And that company basically will operate properties that we buy or buy with other people, but also provide consultancy services to other clients, external clients. So this is just a quick intro about myself. We've sort of covered most of it, but really, the aim of the game for us is to be an owner and an operator. So you have control over the investment. but also control over the day-to-day running of the property. So, that's the asset and property management on the Laroque consultancy side, and then the sort of the asset management and the investment management is through sort of the Laroque asset management entity. That way, the two ideally would feed hand in hand, work hand in glove, and you can work together to extract the best possible value in terms of rental income, but also in terms of capital value as well. So everyone is sort of working, to the same end goal essentially.
Do you mind if I add one little thing on that as well, which is
Sure.
because in residential, often we do the same thing, or I do the same thing. It also limits the risks. So everything that is related to the ownership of a company, of a property, we keep in one company, and then things related to the management in a separate company. So if something, obviously we're taking a lot of precautions, but if something were to go wrong in the management company, that doesn't affect the ownership of the property. So that is a really good way in general of setting things up, not put all the management and operations inside a property owning company.
Yeah, it's mitigating the any sort of any liability. Okay, so this is the property that we bought in May 2024. It's Britannia House in Middlesbrough, and it's quite a big building. It's based in the Riverside Industrial Park, so it's on a sort of established industrial park, about a mile outside the city centre of Middlesbrough, in the north east of the UK, and the whole building is actually two buildings sort of lumped together, as you may see here, and it's essentially, it's a multi-let building, Class E, which we'll come on to a little bit later, but that includes sort of light retail, office, and storage as well. So there's a sort of multitude of uses in here. You can see in the photograph that on the right here, this is a sort of meeting room, so it gives you a bit of an idea of what the condition is like inside when we bought it. This business here is a sort of mortgage broker company, and they actually occupy 2 office suites. At the bottom here, we have a sort of a textiles and a sort of their sort of carpentry company. So they have a bit of a showroom. And then in the corner here, we have sort of a retail sort of therapist who has her own sort of studio and brings in sort of clients by appointments essentially. So we have a real range of uses here, and I'll come on to it in a second. But we also have a few tenants who we had to say goodbye to, who gave us a few headaches when we bought the property. So we had the good, bad, and the ugly, really. But I thought it's worth highlighting just to show that they're not always sort of pristine, gold-plated properties. You do have to deal with some sort of property management headaches. And here are just a couple of examples of how previous tenants have left their units, leaving us as owners with a bit of a headache to deal with. They even thought it was a good idea to store some or sort of dump some rubbish in the communal toilets, as you can see on the far right. So yeah, it's not all glamorous, I'm afraid, but anyway, it gives you a bit of a problem. But these are all great reasons to negotiate hard on the purchase price. So anyway, it looks a lot better now, as you'll see in a second. So just coming on to sort of the headline details, it's we bought the long leasehold interest, which I think is you can buy that in residential, can't you, Trevor?
That's right, yes.
So it's 125 years initially, with 90 years remaining. The freeholder is the local council, Middlesbrough Council, and the ground rent is a peppercorn. So the person I bought it off essentially paid a big capital sum for the grant of this long lease, with no ground rent essentially. So that's the general setup. What we've bought is 4 office blocks, all joined. So it's one very big building split into four. We have in each office block, we have 6 office suites. So 2 on the ground, 2 on the first and 2 on the second floor. And in total, we've got about 18,000 square feet. So it's quite a big building. We have 24 office suites, as I say, which is quite a large number to deal with, but it keeps me quite busy, which is good. And we bought it sort of part income producing, part vacant. So as you'll see there, we had 15 office suites were occupied, leaving 9 to fill and deal with. They were in various conditions, as we'll come on to shortly. But I've just put some figures in here, and there's some more figures later which you'll see. But just kind of gives you an idea of what what we bought. The guide price and the sale price advertised was 900,000 by an agent who was slightly ambitious, probably thinking about it. But
All agents are ambitious, aren't they?
They try to be, yeah.
Yeah.
But this chap wasn't local. I think he just slapped a sort of an 8.5% yield on the income from memory, and just thought that'll do. But actually, the market is a bit different. And when you come to do your due diligence, you kind of find out what things are really worth, what they're trading for. Some of that's in the public domain, some of it isn't. So you have to dig quite deep to find it. Anyway, we ended up buying it for 650,000, so quite a sizable discount from the asking price. And the bank actually valued it at 690 on a sort of vacant possession basis. So I'm sure we'll touch on that in a bit, Trevor. But that was
Actually, maybe we can touch on it unless you're talking about it later.
no.
So this was the valuation on vacant possession, so it wasn't based on the current income and a commercial yield. Was that based on a price per square foot,
Yes.
based on similar comparables in reality then?
Yes, correct. Yeah. Yeah. I did have another look through the valuation report this afternoon just for refresh my memory, but they do reference both. So they do a section on investment yields, and then they do a section on square footage, comparables, and they basically arrive at a figure based on the square footage, but on vacant possession. So they wouldn't lend, this particular lender wouldn't lend on an investment yield on the rent, essentially.
Right, yes.
Ignore the
Would
rent.
you remember offhand in that report, what the valuation was based on an investment yield, even though obviously the bank wouldn't be taking that into account? Did it end up being the same or lower or higher?
It was slightly lower. So they were focusing on about 11% as an investment yield.
Right.
And had a bit of evidence to back that up. They sort of lumped, £3 million properties in as a comparable, which to my mind isn't directly comparable, but anyway, that's valuers.
Sorry, it's Vatsal here. Hi, Duncan. Sorry to
Right.
interrupt. Just on the terminology, the investment yield, is that and Trevor, you might feel free to chip in as well. Is that what I might refer to as the commercial yield? Is that the same thing or something different?
No, it's the same thing. It's a
Same
yield
thing. Okay.
on the gross rent, essentially.
Yeah, got it. Okay, great. Thank you.
No worries. And you have a gross and then you have a net initial yield as well. So they make a deduction on what your net return would be, but it is hypothetical to a certain extent. So this property had a day one income of £65,000, and we essentially bought it on a 10% yield. You can see there. But we also had some rent guarantees in place, and this is a slight quirk that we managed to negotiate with essentially 12 months rent and service charge guarantee on the vacant units. So that is expressed as a deduction on the purchase price. So we actually we had the cash back essentially, in theory, which we then used to invest in parts of the building.
Yeah. Does that mean the stamp duty will be on the purchase price that was
correct? Yeah.
there? Yeah.
Yeah. Yeah. Yeah.
Yeah. And just out of interest, do you if you'd rented out during the period those vacant units, would you have having to give back that rent guarantee, or is it just agreed once and whatever you do afterwards, it's like that's how it is?
Yep, it's a straightforward deduction upon completion, and then it's up to you. You kind of incentivized to let it out as quickly as possible,
Yeah, yeah.
so that you sort of get paid twice in effect. But it's yeah, it's part of the deal, so it's written into the sale contract.
Oh, that's good. Yes.
And also service charge as well, because the other thing with vacant offices, vacant suites, vacant properties is that here, because we have more than one tenant, that there is a running service charge for the communal areas, and the
Yes.
responsibility of that falls on the landlord if they are vacant.
Are there business rates to pay on the vacant units in this case?
There are, I mean, in this particular case, the rateable values fall below the minimum threshold.
Right, because it's not on a rateable value per unit.
Yes, yeah, they're all individually rated. So part of the attraction for us buying this building was that we could see A, mispriced, B, we felt that there were certain tweaks that we could make, simple tweaks to the building, to relet some of these office units, and to significantly push the rental income up in a short period of time, which we've had some success with, as we'll come on to shortly.
Yeah, good.
So there are the numbers, just for everyone's sort of clarity, really. Deposit 39195, stamp duty, legals, valuations, arrangement and broker fees, 24k in total. So we're essentially all in for 220k.
Yep.
For this property.
Was that the sale price of your Chelmsford buy-to-let? You don't have to answer that question, by the way.
No, nowhere near.
Yeah.
No, we had to do a bit of a whip round to friends.
Yeah.
But no, we made it work. So
yeah, but it does give an example. If you got some underperforming residential properties, then sometimes like bite the bullet and sell them, and invest in something that's giving a much higher yield.
Yeah, and for me, it was more about increasing the cash flow. With the residential, the rent covered the mortgage and a little bit, but not very much. And I thought there must be a better way to put this money to use.
Yeah.
And stumbled across commercial, and we'll come on to the benefits shortly. But yeah, that was the thinking.
Okay, great.
And this is how we've, just a couple of examples of how we've added value over the last 10 months of ownership. So we've taken on some of these vacant suites. We have stripped them out. We've recarpeted. On the top left there, you can see we've repainted, put in new lights. We have put in a new sort of sink unit, water heaters, etc. That unit that hung around for a couple of months, and then someone snapped it up very quickly who wanted to move in and get going. The other thing advantage about us being both owner and operators, that we can deal with lease agreements very, very quickly. I basically have a draft drafted up by a solicitor, which is then a boilerplate for all new leases. And I will complete everything, within a couple of hours, all the documents, and serve them to the incoming tenant, and get them moved in within 24 hours, which is not always the case with other properties and other landlords and other managers.
Yeah, that's good.
And the other example here is, you can just see on the communal sort of stairwells and the toilets, we've completely gutted them. A complete refresh, redecoration, new carpets, new toilets, new lino, new sinks, new vanity units, etc., which it's polar opposite to how we found it sort of 10 months ago. So we have reinvested some of the cash from the rent guarantees into this, and the tenants. It's just made everything a lot easier in terms of getting people in. They have very little to quibble with, and it's just it's just put us ahead of our local competitors.
That's good.
So I thought I'd just give everyone a bit of a snapshot of sort of the current state of play. We have 19 tenants at the moment, hopefully 20. I was talking to another chap who viewed today, who is just having a think about taking on another vacant unit. The other thing that we inherited through a couple of people who have done runners was that we had very little in the way of recourse, so we didn't have any. The previous owners didn't have any rent deposits, and they didn't have any personal guarantees in some of their documentation. So every new letting we do, we take a minimum 3-month rent deposit, and we do include rent, personal guarantees.
That's good.
If you have any reservations. Sorry, Trevor, were you going to say something?
No, I was just saying that's good actually.
Yeah. So it just sort of strengthens our position, and if things do go bad, then you have a decent deposit, in your arsenal. Rent income is we've managed to nudge it up quite nicely up to 80,000 pounds. We've only owned the building for 10 months now, and that's been accomplished through a sort of steady process of dealing with outstanding rent reviews through the existing lease documentation, relet some of this vacant space, which we have refurbished, and generally made the building more attractive. One thing is worth sort of noting is that when we first bought it, I went up there within 3 weeks of buying it and went around and met all the tenants, and they said, this is the first person we've seen in 5 years coming to look at the building, so it just goes to show that by spending a bit of time with some of these people, just saying hello, going up there on a quarterly basis, showing your face, listening to what tenants need and how you can easily help them, it just goes a long way. So it's that personal touch. And we've actually we stumbled across, we realized when we were buying this building, it actually included some additional car parking space, which, looking at it on the ground, it was occupied by the neighbouring industrial owner, who had quite cheekily sort of enlarged his space into this area. So without consent, without the previous owners knowing anything about it, and I sort of thought, oh, hang on a minute, this could be an additional income stream for us. So I knocked on the door, had a chat with him. He agreed to rent it for sort of 9 months whilst he was selling some of his stock, and we've put it back on the market. But that was bringing in about £6,000 a year. We've secured it, put brand new vehicular gates on there, security fencing, and we just put it on the market about 2 weeks ago, and we hope to expect to find a new tenant to occupy that space. For it's just sort of vacant, hard standing essentially. So for any sort of light industrial occupier coming along, it's on the market at 12,000 a year, but we'd hope to achieve about 10. We've already had some interest at 7. So that's an additional income stream which we didn't really realize we were going to have. But so that sort of worked out in our favor as well. So here's just a bit of a investment snapshot of the statistics on sort of when we bought it last year, where we are today, and where we're looking to get to. We're hopefully going to go for a refinance sort of middle part of 2027, and all being well, if our rent steadily grows, quarter by quarter, and we manage to attract some new tenants, and we hit our target of 100,000 a year, then we expect to be there or thereabouts at a capital value of 950, which would get all of our initial capital out and more if needed. So that kind of gives you a bit of an overview of this deal, really, and it's it's a good example. Not everything goes your way, but we're moving in the right direction. There's a lot more that we can be doing, and we're working with you know, a limited service charge, but and also limited cash flow. But it's a long-term hold for us. We don't plan on selling this, and we're turning things around. So, you know, we saw the potential and the opportunity for this building, and fingers crossed it continues to serve us well.
Okay,
Anyway,
that's great. Yeah.
that's the end. There are my contact details if anyone wants to get in touch. But yeah, happy to answer any questions.
Yeah. You want to just go back on the screen to the previous page and leave that one because those are really good figures. Yeah.
Sure.
Because in fact, you're almost quite close to being able to potentially refinance and get all your money out after only 1 year in reality.
Yeah, we are. We had a fixed sort of 3-year term on our mortgage. So, you know, we can't go for a refinance, or it'd be very expensive if we did
Yes.
now. But yeah, we're happy to wait until 2027.
Yeah. Okay, that's good. So are there any questions, additional questions? Because some of you asked questions, including myself, during the I've actually got one question, but let's I'll keep mine
So,
outside.
Trevor, Duncan, apologies because it's Vatsal again. I turned up a little bit late, but thanks for the presentation. It was really, really, really cool. In terms of finding a property like this, Duncan, um, do you use a platform? Do you use a network of like commercial agents or something? How did you come across this particular property?
Right move commercial, in answer
Okay,
to your question. And that's one of the portals that I look at. There are others, but you know, we are myself and a few other investors are focusing in that part of the world, the Northeast. And over the last 2.5, 3 years, I've built up a network through agents, and I have really good rapport with them. So they send me stuff off market as and when, and I kind of do a ring round, you know, once a month just to see what's going on, get a good idea of what, you know, what's out there, where rents are, where yields are, and just sort of continually keep my hand in, really.
are you quite specific about your requirements, Duncan? Does that help? Like, is it quite a focused set of requirements, or do you just look for anything that you can add value to?
Generally anything. It depends who I'm looking for. I mean, work with, you know, Trevor and I work with one or two people who have specific requirements and specific, you know, amounts of money, and we then sort of reverse engineer to think, right, well, with that cash, you know, what does that get us? You know, let's start looking at something that's 100 or 200,000 on top of that, with a view to getting that down and, you know, starting to sort of work up a deal, really.
Right. And then I'm just gonna be cheeky, Trevor, just ask one final question. I'll
Yeah,
shut
yeah.
up. But yeah, so I didn't quite understand the rent guarantee thing that went on with this property, because it seemed like you were able to take that off your actual consideration for the property. So the rent guarantees were whose commitment was that to provide rent guarantees? Sorry, that's I was a little bit unsure about what was going on there.
Yeah, but I probably skimmed past it very quickly. But essentially, we were going to buy 3 blocks out of 4. The vendor didn't want to sell the fourth. It was occupied by 2 tenants and had 4 vacancies. And I said, look, I'm not going to come back to you in a year's time once you fill that space. You know, either we do a deal for the whole lot now or we don't. And he said, fine, let's do it. And I said, if we do it at this price, you know, I'm going to need a rent guarantee for the 12 months for the vacant units.
Right.
So just a pure negotiation. And they said, fine.
So in effect, they were reimbursing you for any void basically that you had after you acquired until, let's say, it was tenanted. That's fantastic.
Correct. Yeah. I mean, they're
Yeah.
in a pretty bad state. You know,
Right.
the landlord who would just siphon off all the cash and wouldn't reinvest anything. And he actually did very little to remarket those units. So I said, look, I've got to actually spend quite a bit of money to get these into good nick and actually have any chance of securing a tenant. So that
Yeah.
was my rationale, really.
Very good. Well done, Dan. Well, you don't need me to tell you well done. Well done anyway. Congratulations. Yeah. Great. Yeah,
Well, we've
fantastic.
got a few more to let, but yeah, we're it's a nice cushion.
Yeah.
And actually it's quite, it's fairly commonplace if you are gonna take over a full building with some void. So worth having in your back pocket if you have to stretch on the price, but say fine, well I'll mitigate my downside by taking a rent guarantee.
It's already in the toolkit now, Duncan. Thanks very much. Thanks.
And service charge. Don't forget the service charge
Yes,
and
yes.
any rates as well, because they will kill you if you're not covered.
Right. Fantastic. That's awesome. Thank you.
A pleasure.
Yeah,
Pleasure.
my question before I forget it is capital allowances. Have you been able to claim capital allowances, or is there anything possible to do in that area, or had they already been claimed by the previous landlord?
That's good. I think they've already claimed by the previous landlord. We have very little in there in the way of sort of M&E. So no lifts, there's no central heating, there's no air conditioning, etc. When the chap I bought it off, he actually he bought the lease, the 120-year lease. It was a building site, and then he got consent to build this building. So I suspect he's basically used all of his allowances
Right.
when he built the thing.
Okay, but obviously those are things to look out for
Yeah, very much so.
in general on commercial properties.
Yeah.
So we've still got a few minutes left. Does anyone have any questions either related to Duncan's presentation or in general related to commercial property investments? So I think we've covered a lot of things. So thank you again, Duncan, for joining us tonight.
Pleasure. Thank you. Thanks for having me on, Trevor.
Yeah. And everyone have a good evening.
Thanks both. Thank you.
Okay.
Bye.
Thanks.
Thanks,
Nice
guys.
to see
Bye,
you.
Cheers.
everyone.
Take care.
Thank you, Trevor. Thank you, Duncan.
Thank you. Thanks, guys.